Hello and welcome to Tax Matters. I'm Chamaka Ohaochi. How is your week going and how is business going? We begin with sharing news from Revenue House Abuja, where the Federal Inland Revenue Service has magnanimously approved the payment of outstanding foreign currency tax liabilities in Naira. A statement released under the hand of the Executive Chairman FIRS, Mohammed Nami, states that in view of the number of requests, inquiries, and the challenges encountered by the tax-paying public in sourcing for foreign currencies to offset outstanding tax liabilities, the Federal Inland Revenue Service wishes to inform our esteemed taxpayers that a 1-month window has now been opened for this category of taxpayers to settle their foreign currency tax liabilities in Naira with effect from the 1st of March 2022 to 31st of March 2022. This is a one-off concession and the applicable rate shall be the investors' and exporters' foreign exchange rate of the Central Bank of Nigeria prevailing on the date of the transaction and or when the tax obligation falls due. This concession is available to all taxpayers and covers all tax types except for companies in the upstream, that's oil and gas sector, and all foreign currency tax liabilities falling due on or before 31st December 2021. All payments must be made before the 31st of March 2022. Welcome once again. Are you running your business as an enterprise, business name, professional practice, and or partnership? If the answer is yes, then your annual tax filing and payment fall due on the 31st of March. In this regard, you are expected to file a return of aggregate income from all sources for the preceding year with the state tax authority in which you are domiciled. If you're operating in the Federal Capital Territory, Abuja, the filing and payments are due to the FCT IRS.
Let's go taxing. Hand in hand, cheerfully. We go taxing as birds of a feather that flock around to make a living. With our signals drawn on the field, we go to pay our taxes cheerfully, knowing that our lives come to naught without us taxing together, to build our homestead, to mend our lives anew, to make our lives whole. Let's go taxing, hand in hand cheerfully, drawing our strength like a broom that breaks knots, for taxing together makes us wholesome.
You are still on to Tax Matters. Following the controversy over the removal or non-removal of fuel subsidy and the directive of the President that subsidy be retained for a further period of 18 months, the executive submitted a request for the sum of 2.5 trillion naira to the National Assembly to take care of the subsidy. This has given rise to a need for an amendment to the Petroleum Industry Act, PIA, to make it legal for fuel subsidy to continue. It also brought the PIA back into the limelight. In the wake of the passage of the PIB into PIA on August 16, 2021, Tax Matters sat down with 3 tax industry leaders to get them to shed light on the PIA 2021. The outcome of the interviews with these 2 men of caliber and the Amazon among them ran for 2 episodes on Tax Matters. Today on the program, we want to conclude that outing by trashing out the remaining gray areas. Let us begin by refreshing your memory on some developments post-signing of the PIA by President Muhammadu Buhari. As prescribed by the PIA, the erstwhile NNPC is now a newborn baby in the form of a limited liability company duly registered by the Corporate Affairs Commission. Also, the newly created regulatory bodies, again as prescribed by PIA, have since taken off. The PIA is a single document that replaces the Petroleum Profits Tax Act, PPTA, and a myriad of other related laws scattered in many statutes. First, some highlights from the earlier episodes. What are the major provisions of the PIA 2021?
There are many. For instance, the PIA has introduced a new licensing regime. It has also categorized petroleum operations into three distinct categories. So previously we had upstream and downstream operations, and anything in between could either fall within the purview of upstream operations, arguably, or downstream. But what the PIA has done now is to make a clear demarcation between the three classes of activities in the sector. So we now have upstream, midstream, and downstream operations. The PIA also introduces funds and also sets out how these funds would be administered and what they would address. So you have a special fund that is dedicated to host communities. You have a special fund that is dedicated to what the Act calls frontier acreages. So essentially this is a fund that is tailored towards development of new frontiers, as the word suggests. And then you also have the Midstream Gas Infrastructure Fund, which is meant to also enhance gas development, as well as the Environmental Remediation Fund. Another major highlight of the PIA is the establishment of two regulatory bodies. Prior to the PIA, we had just one major regulator for the industry, and that was the DPR, Department of Petroleum Resources. The PIA has now established two distinct regulatory bodies, one for the upstream sector, and then another one that would regulate the midstream and downstream sector. So for the upstream sector, you have the Nigerian Upstream Regulatory Commission, and for the downstream, you have the Nigerian Midstream and Downstream Petroleum Regulatory Authority.
More highlights.
Much more, where the impact is being felt and the discussions are going on, is actually under the fiscal regime, whereby the law introduced dual tax system into Nigeria for the first time. It has never been done before. Before, it used to be petroleum profit tax return, but now it's called hydrocarbon tax. And then you are going to file company income tax return together by one company. And also some costs that used to be allowed under the previous petroleum profit tax have been taken away and can only be allowed under company income tax return, unlike before. Penalty have been increased. Prior to this one, when you don't file your return, the penalty used to be the first month, 10,000, and then 2,000 for each day. But 10,000 has turned to 10 million. And then for each day that the return is delayed, it's now 2 million.
The second installment began with Mr. Olarewaju taking us through the fiscal regime of the PIA 2021. What is the fiscal regime in the PIA?
The fiscal regime addressed the issues of allocation and then the tax payments. And it focused much more also on the contribution to the host community. The objective basically is to give opportunity to an investor to come down to the country, and also to increase government takes and the process to go about it, right from investment into the oil field down to the production of the crude oil, including the disposal of this crude oil, and then the filing of tax return and sharing of the profits, both by the government and the investors.
Still on the fiscal regime. Talking about the fiscal regime, do oil companies still have to pay petroleum profits tax which in the old act was at the rate of 85%.
Yeah, with the PIA, I would say some companies may still have to pay tax at 85%. I will explain. But the PIA in itself, as the rate in PIA is a lower tax rate of maximum of 60%, and you have minimum of 45%. Now, under the PIA, you are having to have two tax types. You are going to have hydrocarbon tax, and you are going to have corporate tax. Under the hydrocarbon tax, we have two types. The new entrants, those people that will take oil block after the signing of the law, the being into law, that is from that August you mentioned 16, they are going to pay tax, hydrocarbon tax at 15%, and corporate tax at 30%, making 45%. While the existing oil blocks that convert, because they are going to have conversion, presently we use oil mining leases and oil prospecting licenses. They are going to convert. There's a way called conversion. If they are converting to PPL, that is Petroleum Prospecting License, and PML, Petroleum Mining Licenses. When they convert, they are going to be automatically come onto this PIA. But if they don't convert, they will remain on the old law than on the PPTA. And while they remain, the law gives a room, an allowance of 18 months from the date of signing the law by the president for them to convert, or a longer period if they still have a license that has not expired. Their license period, the moment it expires, if your license period expires before that 18 months, you still have up to 18 months to convert. Or if your license period exceeds that 18 months, you can convert between that 18 months or until your license expires. So while you have yet to convert, you will be paying tax at 85%.
Coming to tax rates and the tax regimes that now apply under the PIA. For upstream operations, under the new licensing regime, you now have petroleum mining leases, which is the highest level of title that you can hold. You have petroleum exploration licenses, and then you also have petroleum prospecting licenses. Typically, holders of petroleum prospecting licenses do not pay tax because you're still prospecting for oil. So under the PIA, if you're a holder of a prospecting license, you're now liable to a hydrocarbon tax, which is a new tax that the PIA has introduced, of 15%, provided you're producing in a shallow water region or onshore. If you're a holder of a petroleum mining lease, your tax rate would now be 30%. Again, provided you're operating in a shallow water or onshore region. If you are operating in a deep offshore region, typically the deep offshore production operations in Nigeria are being done under production sharing contractual arrangements. So if you're operating in the deep shore region, you won't pay any hydrocarbon tax. So as a PSC contractor, you will pay just the company's income tax of 30%. Whereas holders of PMLs and PPLs operating onshore or in shallow water regions would, in addition to the hydrocarbon tax, pay a 30% company's income tax as well. The PIA also introduces a new royalty regime that is not just based on production, but also on the price of crude, which is why if the PIA had been passed 10 years ago, we would be in a much better place economically, because we would have made a lot more from the price of crude, which at the time was in the region of $100 and above in some cases. So, but back to where we are now, you now have a new royalty regime that is based on production and the price of crude oil. Now, when you look at the rates that the PIA has introduced, there's actually an effective increase in royalty rates than what we had in the previous regime.
Now to the concluding part. In the old law, there were terms like JV, joint ventures, PSC, production sharing contracts. We asked our guests if these still exist under PIA 2021.
Yeah, joint venture, production sharing contract, they are purely commercial arrangements that is common in the industry. It's just a way of handling the business, which also is going to continue in the PIA. What I mean is this, under the joint venture is that you have 2 entities or 3 entities coming together to operate on a particular block, and they will now have a way of how they are going to fund it, on how they are going to share the profit, which must be according to their equity participation. Under the production sharing contract, the one that the government is involved, is the same that government owns the oil block, and that whatever that is produced, the oil company will spend its money, recover its cost. What is left, they will pay, we need, before they now share what is left, they must pay profit tax, they pay royalty, and they pay tax. That's just a commercial arrangement, so it will still continue. But the way of administering their fiscal now may be a little bit, as I mentioned to you, under the present PPT now and deep offshore land basin, the tax is paid at the, we call contract area level. Before we now, the loan has share the interest, the receipt between the contractor and the corporation. Now it's not going to be like that. The contractor will take his cost oil, he will take his profit oil, and go and file his returns with FIRS and pay tax on it on its own.
And what the PIA has done is that it has modified, it has introduced incorporated joint venture arrangements. So yes, we still have those terminologies in the PIA, but we have a modified joint venture arrangement now, which is the incorporated joint venture company. So joint venture is when you and I come together to do a business together, but we don't form a company together. You're bringing certain things to the table, I'm bringing certain things to the table, but we have a contract. What the PIA has done is it has introduced the concept of an incorporated joint venture, where we both form a company and we're both shareholders in that company. So we're joint owners of the assets of that company. So we have that in the PIA. What we also have in the PIA, we still have the production sharing contract that I mentioned, but the PIA has now also introduced another modified version, right, which is a profit sharing contract. The production sharing contract is a contractual arrangement that is not cash-based. The contractor recovers his costs through oil allocation. Profit is shared by oil allocations. Tax is paid by oil allocation. Royalty is paid by oil allocation. That's the peculiarity of a production sharing contract. The contractor calculates the cost that it has incurred, right, from the production of oil, and oil is allocated to the contractor. The contractor also pays royalty through oil. Oil is allocated to the Nigerian government. Tax oil is also shared between the contractor and NNPC and allocated to the government. Likewise, royalty oil is also allocated to the government. So the PIA has now introduced a profit sharing contract, which is still essentially a production sharing contract that is cash-based.
Now, Ma, for long, while the passage of the Petroleum Industry Bill into law was being awaited, it was said that the delay was shutting out local and foreign investment into the oil and gas sector. Now that the law has been passed, do you think investment will flow in, or could just put simply, is there any cause for cheer for new and existing investors?
Okay, so those are three questions in one that you've asked there. The first one is whether the long passage has shut out investment. The simple answer to that is yes. Reason being that more than tax incentives or investment incentives, what investors really cherish the most is clarity. Clarity in terms of what the law provides, what the law allows them to do. Clarity in terms of how much of their investment returns would they be able to repatriate, how much profit can they project in that investment. The lack of that certainty due to the non-passage of the Petroleum Industry Bill at the time is a major factor to why investment, we have seen reduction in investors showing interest in Nigeria. The second question you ask is, now that the PIA is finally here, would it encourage investment? The answer to that is yes, hopefully it should. However, I think the PIA would probably attract more domestic investment than cross-border investment for two reasons. The world is gradually shifting away from hydrocarbon and fossil fuels to what we generally call clean energy. And that's a mix of a whole load of things. But there's a gradual move away from fossil fuel, which is what our crude oil is. And so with that, you can expect that there will probably be less interest coming from international investors. And the reason for that is because of financing. It's becoming harder to finance, especially greenfield projects that are related to fossil fuels. However, on the domestic side, there's a lot of hope. And I think I'm somewhat excited. And if I can borrow from a terminology that we use in mining, I can see that there's some beneficiation policy drive in some of the provisions of the PIA, in the sense that there are provisions that are encouraging domestic gas utilization. And the PIA, for instance, recognizes a special category of investments that it calls an integrated strategic project. What does that mean? That's a project where you produce crude oil and you process it into usable products that you can then introduce into the retail markets. So an investor now who really wants to enjoy the benefits of the PIA should be looking towards producing crude oil for local refining and production of petroleum products, and even the gas that can be a byproduct of that oil operation can also be utilized locally to feed into the local energy market. So that's a huge investment opportunity there from a domestic perspective.
The delay in the passage of the Act actually caused a lot of uncertainty in the industry, which made a lot of investors to hold on to their money from investing it, because they are not sure of what is going to happen. And you know that oil and gas industry is, Nigeria is not the only country that has oil in the world, especially even in Africa. Of recent, most countries are even having more, we are getting more discoveries of oil deposit across West Africa and Africa and even in the world. So when you have uncertainty in the fiscal regime, the taxpayers, the investors hold on to their money and take it to where they believe that they have more certainty on what is going to be their take. But with the passage now, at least certainty has been created in the industry, and they know that, okay, government has come up with a law on how to administer this sector. With that, it is hopeful that there will going to be flow of investment, especially when the provisions of the fiscal and everything is more transparent, because the law now makes us the most transparent, and there are a lot of incentives that are there that will encourage investors to bring in their money, which will improve the FDI, foreign direct investment, in the sector in Nigeria.
There you are, PIA 101. As we said in the introduction, the Act is going to be amended by the National Assembly, mainly with a view to legalizing the provision for fuel subsidy, which the experts say was not part of the original PIA. Thank you for watching. See you next week.